Hello, this is Rob from BuySide Global. We have a chart patterns indicator. A lot of the times, the question being asked, how can you trade? It's not about the indicator, it's a strategy in general. How can you trade chart patterns and then price action patterns in your trading? Let's talk a few examples first. Let's talk about the double top, double bottom, or head and shoulders, or reverse head and shoulders, or like a wedge. Those patterns, if you look, if you do not need, you should not be trading individually. As soon as we see a pattern, can I trade? Absolutely not. You need to know the reason why you should be trading those kind of patterns. Let's start with the double top or like a head and shoulders. Those are very effective only when the market is moving. Why? When the market is trending in one direction, either up or down, we are looking for the signs where the market can reverse, market can halt. So the best way is the price action patterns. So let's look at some examples here. I have on the screen uh, our indicators on. It's called BSG price action pattern. It can detect the double top, double bottom, head and shoulders, and wedge patterns. Every time it can see a pattern, it's going to draw it for you. In this case, it says double top, double bottom, rising wedge, falling wedge. So again, the point is you should not be trading everything. The objective for the indicator is to auto detect and then highlight you so that you know what's going on in the chart. So let's look at what are the patterns I should really trade. To understand that, you need to understand the market cycle. When there is a market trending one way up, let's say there's a wedge. Wedge is typically meant like rising wedge. It signifies a market moving upside, like trending up or trending down. When you see a rising wedge, that means the market is moving up. That means at some point the market is going to pass or reverse down. So how do I know? That's when you need to look for either the double top on a rising market or a head and shoulders on a rising market. Let's look at some examples right here. Anytime there is a market is going sideways, those pattern, even though there are patterns forming, just seeing I see a pattern, that's it. It does not say you should trade. Let me show you a few examples where you should really trade. Okay, here is a best example. Market is, in this case, is a moving. It indicates a rising wedge. It's clearly marked on by the market is trending up, and then followed by a double bottom. So you can see that market try to go sideways, double bottom, break down the double bottom edge. That's a signal. So always those double top, double bottom, head and shoulders, reverse head and shoulders are very effective only when the market is trending. It can tell you when the market is going to reverse on the opposite direction, okay, or it's going to continue. That's why it's either it's continuous or reversal. You should not be trading those patterns when the market goes sideways. Right here, look at this, just going sideways, those really doesn't work. But when the market is trending up here, you see a pattern that works. Let me find some more example in the same context here. Okay, here the sideways market, there's nothing effective in here, but that is a pattern that's been recognized. So look here again, the market is moving up, they say double bottom, it continues. Okay, let me see again. Okay, it's a better example here. You can see the market is coming down. At some point market need to stop, market need to reverse. That's when you can see both. It's a confluence. What is a confluence? You'll see multiple confirmations in terms of that is a head and shoulders, reverse head and shoulders, and then the double bottom, both is forming after the huge run down. This is where the these kind of patterns are very, very effective. Okay, so again, if there is a double top, double bottom on a sideways market, you should be ignoring those things. Indicator is going to show every possible pattern recognition, but the very effective one is when the market is moving down, when they see a reverse head and shoulders, or in here I can say double bottom also. Those are the better signals. Okay, um, Same thing here. The market goes sideways. Those pattern don't mean anything. Okay. Actually, I'm looking at the ES and 5 minute. Today is July 26th, so that you can compare. Let's look at the different market. Let's look at the crude. Same way, in terms of, let's look at the crude. Okay. Let's. I think I'm going to go back to the initial. So that, okay. So wedges are just to signify the market is going one direction. I'm going to ignore those. But here, look at this. Market moved from going up, then it's a double bottom here. This is a pretty good signal. But here, look at this. Market goes sideways, just forming a pattern doesn't mean anything, because after the run up or run down, those patterns are very, very effective. Okay. When there is a sideways, absolutely not. Okay. Again, here you can say double bottom is the market went up, head and shoulders forming down, but I would not trade those. Okay. Um, Let me show you. Okay, look at this. This is another basic example. The market run up. Market ran up. Look at the confluence in terms of head and shoulders, double top. Look what happened. Look what happened. Market comes down. When there is a market trending up or trending down, it tends to give you the signals of the price action wise. That's when it's really, really effective. Look at this market went up. We see at head and shoulders, also the double top. That's clearly hitting the market down. All right, again, look at this. Market is moved up, double top coming down. Again, market went up. There's a movement here. Anytime there's sideways, no, definitely no. Okay, again the market sideways. This one I would ignore really. Okay, so hopefully this video, I wanted to convey only one point. Don't trade every single pattern. Um, Double top, double bottom, head and shoulders, everything should be traded only to signify the reversal of the market, when the markets are trending up or trending down. That too, when you see a wedge, rising wedge, followed by a head and shoulders or double top, then it's a reversal. You can take a short trade. When these are falling wedge followed by a, reverse head and shoulders double bottom, then it's a long trade. So don't trade every single price action pattern. Know why you should be trading it. What is going to cost those things. So if you have any questions, always you can email us at info@buysideglobal.com. Happy to answer anything. I can give you some more examples. Thank you. You have a great day.